Commodities have been on fire. They've been rallying like crazy. Oil is the most noticeable one, but lumber, uranium, copper, metals, there's not too many exceptions. Of course, the talking heads in the media want to attribute it to existing geopolitical conflicts and supply chain constraints. Is that really what's causing it? I have no idea. Just go with what my charts show. And we haven't done an update in uranium in quite a while. If you have been watching me since the fall, I was quite high on the UUUU stock and the associated uranium ETFs, but then it looked like we had a topping structure. So I made a video encouraging y'all to bail out, and I even made a short play on that. But alas, we have ourselves a rally in place in all three. I'll be covering UUUU, so 4 U's, as well as 2 ETFs. So the uranium Northshore Global Uranium Mining ETF and URA, which is the Global Uranium ETF. I track all 3 because they're tracking very closely together. I generally prefer broad ETFs like these, as I do for even my metals trades. Tend to follow GDX, GDXJ, SILJ, things like that, COPEX. So that is why I'm following these. Something like oil, you often see a bit of a decoupling. You'll see correlation between XLE and something like USO, even though they both have their own independent movements. For the most part, we're seeing a lot of correlation here. If we're going to start with uranium, UUUU. So this is again energy fuels, and I had a short play set up. I played it. I got stopped out. It wasn't particularly lucrative because I was expecting us to fall deeper than we did. So we had our topping structure. I have a detailed video from probably October or November that details why I saw this as a topping structure. But in short, we had a large pattern that started in March of 2020 from the everything crash. We had a big wave 1, 2, 3, 4, and then what looked like a 5th wave top. Everything followed perfect Elliott wave Fibonacci pinball targets, and our last 5th wave top also fit all the proportions almost perfectly. Despite the absence of a clear 1, 2, we have a 3, 4, and then that last 5th wave was also subdivided as we'd expect. And just as I had called for, we had quite the pullback. And we had the 3-wave pullback because second waves tend to come in zigzag form, 3-wave patterns, and we had 3 waves down. So that's it, right? Did you buy the freaking dip? You ready to ride the next rally up? Not so fast. I personally do not believe that we have fallen deep enough. Second waves are all about resetting sentiment. We should have at least had a 38.2% retrace in this stock, and we just barely exceeded the 23.6% retrace. As you can see here, I was expecting much deeper. When we look at the internal structure of this ABC, it's just about a 1-to-1 ratio between this A wave and the C wave. So we definitely got a C wave, but I think this is a smaller degree A and B. So really, this is what I'm looking at right now. This looks like a B wave fake out to me so far. You could count this as 5 up, but you see the same kind of pattern in our ETFs. So this is again the uranium ETF, URNM. And when you look at this thing, exact same structure. We actually topped even higher. The structure is arguably even cleaner here than it was in the uranium stock, UUUU. And when we look at this internal structure, this is the daily chart. You kind of see what I'm getting at here. We did not go deep enough. We went just below the 23.6% retrace, where we'd expect at least a 38.2% retrace at minimum. And anything as far down as a 61.8% retrace is healthy. So that could be as far down as 32.18 for this particular ETF. And we look at the closer up view of this thing. It's the same story. You can see the internal structure of this thing. I can't count this as 5 up. This cannot be an impulse. This is a zigzag up, zigzag down. Is that a zigzag up? I don't know. Maybe it's a 1, 2, 3, 4, 5, very convoluted diagonal. Diagonals are, of course, not dependable. You don't know. I think this works better as an A, a B, and potentially a C. Even that is questionable. URA has the same situation going on. This is the Global X Uranium ETF. You could argue this looks a little bit better as a leading diagonal, but one could also argue that this is a wave up, B wave down, and then maybe a really strange looking 1, 2, 3, 4, 5, maybe an ending diagonal for the C wave. When we look at that on the big picture, same kind of thing. We're seeing a blow off top, and you can see I put some Fibonacci time sequences just to get some estimates. Elliott wave theory typically doesn't present any robust timing estimation tools besides channel trend lines, things like that. Those are often very predictive in diagonal situations. I'm not saying anything like that here. So these are just purely for my own exploration. But look at that MACD. We're getting quite stretched to the upside in here, as well as uranium, URNM, and the 4 U's, same kind of thing. We are very overbought. So in my personal opinion, based on the analysis, maybe we could keep blowing up from here. We've certainly seen that kind of thing in oil. We were supposedly in a B wave up, and B waves can be spectacular. We actually saw this kind of thing. As a matter of fact, our entire rally from our 2018 December bottom in the S&P 500 to the top right before the March 2020 crash was actually a B wave. So you can have crazy B waves. They are part of what we call an expanded flat in which the B wave exceeds the top of your previous peak. We're definitely not seeing that in the 2 ETFs, but we very well maybe seen that in UUUU. So there's really nothing here that I'm playing. There is potentially a short play that you could make here. Now, if starting with UUUU, again, this does look like an A, B, and a C wave blow off. It actually looks much better on this logarithmic chart where you have that 3-wave pattern up for an A, B wave down, and a clear C wave, a 4th wave dog leg down here before you have the final blow off. I don't see any MACD divergence. that's a whole other story. You could probably short and get a pretty high probability play here, something I may be covering. I'm going to watch this thing over the next few days, because if it does fall, it's not going to happen overnight. We can see how long this took. This is from November 12th, actually. And the bottom happened on January 27th. So that's about 2.5 months or so. We've been in this rally for about a month and a half. This thing could take a while. Now, there is a chance we go straight down in the box, but more likely we're going to have a bit more of a meltdown kind of situation. So there's no rush to short this if you want to play it. B-wave tops are usually a relatively high probability play to short from. As I always say, 1-2s are your best when you're going up. When you see a 1-2 setup like back here, you go long for the third wave. We're looking for something like this in all the cryptos, in the S&P 500. Here, it's a B-wave setup. So if you're going to short, that is probably the highest probability short play you can make. But again, I'm not going to rush into this thing. The same goes for URNM. As a matter of fact, these are following more standard patterns. You see the same kind of thing in A, a B, a C, clear the three-wave A-wave structure. Again, in textbooks, they generally don't talk about this, that how common it is to see a three-wave structure in your A-wave, but doing this for a few years, this is absolutely the most common A-wave structure you'll see, clear three-wave pattern for the B-wave bounce, and therefore I would expect this thing to also crash down pretty spectacularly. This could go down to $50, maybe as far down as, let's see, where does that 61.8% retrace take? $32. So quite a bit of range here, and we're going to see how this thing develops. We've got to see this B-wave top before we can make any kind of, draw any kind of conclusion. We'll have a couple more confluences. Is it going to be a 1-to-1 ratio between the A wave and the C wave? It is yet to be seen, but it should be pretty good setup. And of course, find the URA, same kind of thing. This looks like a B wave. Once we start seeing this MACD curve, that would be an initial sign that we're coming down. Another clue to look for is that in a C wave, you will typically see an impulsive structure. So let's say we go a little bit higher, just assuming that we are, we would see a 5-wave impulse down, pretty sharp second wave, and then you'd probably see a C wave or a third wave down, and your final 5th wave could go something like this. You will often see an ending diagonal. That is common too. So maybe it looks a bit more choppy, a bit more whipsaw. Perhaps we don't go as deep as you'd expect. You get a truncation. All those things are possible. We've seen all that stuff before. So again, if you have the guts, you can short it. I think I'm going to, again, wait out a few more days, a few more weeks before I attempt anything aggressive. But after that, remember, best time to go long is at the bottom of the second wave. The question is, where's the bottom? We're going to find out. We're going to have a lot of cues, a lot of indicators before we're ready to see that. So look for this thing to start pulling back relatively soon. Could take all the way into the middle of the summer. We'll see how well this aligns with the metals, which of course I'm going to have videos on. Silver miners is one of my things I like to follow. We've been seeing quite the development there. COPX, copper ETF, that's something I'll be putting videos out on as well. They may align. Oftentimes the sentiment aligns, the inflection points align, even if the structures don't look the same. We're going to see what happens here. When we get to that bottom, that could be a great time to accumulate longer term holdings, because long term, this was a heck of a rally already as is. And let's assume we get a 50% retrace on the wave two. That'll split the difference between the 38.2 and 61.8% retraces. Third waves usually go from the 1.32 to the 1.61 extension. Those numbers are asinine. Can we get up there? We've seen crazier things before, especially with this relatively new ETF. And we've had kind of a multi-decade low in a lot of commodities. People are complaining about inflation, but they don't know how good we have it right now. We are still nowhere near the prices we were at in commodities in decades past. You can see the same kind of thing here in URA. I'm going to put a fib extension tool together for this as well. And when I do that, look at this. Let's say we have a 50% retrace. We are sitting at $26. Go up to 123. Was that a 5x return? And finally, look at UUUU. If we get that expected retrace, let's say we get a 38% retrace, just to be conservative here, sitting at about $10. Shit, $160. That sounds totally crazy. But again, we've seen crazier things before. So this is definitely one to look out for, but not one to rush into. I'm going to have updates on this. Subscribe so you don't miss my updates. Commodities are definitely a big part of this channel. It's not all about just cryptos. And if you enjoy my content, give me a like. Until next time, thank you for watching and happy trading.